I've been secretly buying these stocks, and for each of them, I'll share with you why I didn't produce a tutorial for it. I'll also be sharing with you, in terms of a speculation rating from 1 to 10, how speculative the idea is. And last but not least, I'll also be sharing with you my rough plans on it. Would I be buying more? Would I be selling? But take note again, this is not a buy and sell recommendation. And as we go through the list today, I'm sure you're familiar with the first and the last name. Hi guys, welcome back. Without further ado, let me share with you the first name that I've been secretly buying. And surprise, surprise, it's actually Palantir. If you're not familiar with Palantir, you might be asking, who are they and what do they do? So let me put out what's mentioned on Palantir's homepage. What we do is to make products for human-driven analysis of real-world data. What in the world is that language? It also explains why I didn't do a full tutorial on Palantir, because it's so difficult to explain what they exactly are. For me, I work as an advisor. I'm not in the tech space. Maybe you work in the tech space and you are much more familiar with it. But my understanding of big data is next to nothing. It is something I'm humbly aware of and something I've mentioned before in previous episodes, scratching the surface of Palantir. Take a look at these two videos. They were done in June 2021. Back then, Palantir was raging hot. Everybody in the forums were talking about Palantir stock going up to the moon. For me personally, it was quite evident that it was hyped up. Palantir then was still a loss-making company. Any criticism I had to shelve it and put it in the private members channel, where I know there wouldn't be Palantir superfans. And I did mention that Palantir could be at least 60% overvalued. If we were to see what happened to Palantir in 2022, we would realize that it saw a big decline. Was I correct? Maybe yes and no. Because Palantir did actually go up further in the next few months after that video was produced. But again, this is history. What Palantir is still doing is produce revolutionary big data software that can help governments and companies massively improve what they are trying to achieve. For example, Foundry, which is one of these key components, it helps organizations make better decisions with big data and AI. The second, Gotham. This is the cool one over here. US government needs defense, correct? And as you can see, when it comes to war, interpreting a lot of data that can give you an advantage that is unseen before. That is why also government contracts are a staple for Palantir and why profits will forever be churning. The question for Palantir is whether how fast they can grow its commercial arm. All in all, I think there's overwhelming information to suggest that its software is indeed cutting edge. That is why after the hype of 2021, I actually think it's much less risky now to buy than back then. Let me use this chart to highlight to you what are key turning events. Back in April 2023, there was the first sign that Palantir would be turning profitable. Then subsequently in February 2024, Palantir actually confirmed a full year of profits coming up and robust AI demand. That was when shares actually jumped further, and that's when I actually decided to take action and start accumulating Palantir stock. At this point of time, Palantir had already recorded 5 consecutive quarters of profits that are growing. Looking at its balance sheet, we can clearly see that its cash holdings have been building up, correct? From 1 billion to 2 billion and right now to 3 billion. It is right now producing a lot of cash flow just like the big tech firms. This over here is Palantir's cash flow statement across multiple quarters, and it's also from Stockopedia. Stockopedia gives you all the insights you need to analyze the stock properly. And they also have a proprietary stock rank system that simplifies the process of evaluating stocks. Palantir right now gets a score of 60 because of its high valuation. Which means also, if prices come down, it might be a time to accumulate it. If you want further shortcuts, you can even browse their stock ideas. And under top momentum rank, this methodology has produced 13.82% per annum return rate. If you're investing, check out top stocks ranks, which factors based on momentum, value and quality, and some of them have earned a title Super Stocks. Annualized rate of return 13.64%. Within it, you can find global ideas or even Singapore-based ideas. If you want to create your own stock screening criteria, you can easily do so on Stockopedia. Over here, you can input dividend yield as well as ROCE to filter for the best companies listed in Singapore. Companies I've covered on this channel. So if you're keen to sign up for Stockopedia today, you'll receive a 25% discount using my unique referral code, which is the first in Singapore. Inside it, you'll see my specialized landing page just for you. Take control of your investments today make smarter analysis, and make smarter investment decisions. Now, back to my journey investing into Palantir. I've been accumulating Palantir at the start of the year, and as you can see, there are many buy green trades, correct? And this has persisted all the way until April. The position is getting a bit big for my liking. That's why I've started to trim it down a little bit. But all in all, I still think that this, in terms of a speculation rating, is maybe only 3 out of 10. Yes, there's uncertainty in its growth rate, which impacts the valuation. But as you can see, Palantir is a high quality, high momentum stock play, and it's quite likely I'll be holding on to Palantir for quite a long while. Let's move on to the second name of the day, which is actually in Singapore. This company is a small cap oil and gas player, and it's none other than Dyna-Mac. Have you heard of Dyna-Mac or not? I guess not, right? That is one key reason why I didn't produce a full tutorial on Dyna-Mac, because I think the viewership demand will be quite low. Not just that, I'm also not an expert in the offshore and engineering market. So whatever I say here will be fully reading what management has mentioned already in public annual reports. But actually, Dyna-Mac is not as difficult to explain as Palantir. Dyna-Mac actually produces and constructs equipment for the offshore oil and gas sector. This over here is a floating production, storage and offloading vessel, in short called the FPSO, and it's actually been around for a long period of time. It is part of the value chain for digging oil off the coast, and when oil rigs dig it up, they will pump to this to store and eventually bring back onshore. So for us laymen, we need not know how to construct it, but we need to understand when does demand actually come in waves. And it's quite simple to explain actually. What we can see over here is a chart for crude oil over the last 10 years. Quite simply, as long as crude oil is above $60, there will always be deep sea oil demand. The reason is because it's enough to produce profits already. Right now, oil is settling at around $80+. That's why offshore drilling is getting profitable, and this leads to order books for Dyna-Mac. As you can see over here, Dyna-Mac right now is having a record order book worth $896 million, which is double its previous year. This order book was stretched all the way to 2026 and come with good margins. I've been tracking Dyna-Mac for quite a while, and I've actually published this in my Telegram group that's actually looking pretty good. I've seen questions on Citron before, but actually Dyna-Mac, in my opinion, is a much simpler oil and gas play. In that case, if you're keen to join my Telegram group, look for the official links below, because on Telegram, there are many impersonator scam groups. Let's jump back to the offshore market, specifically the FPSO market. What I can share is bullish signals are observed across big and small players. Dyna-Mac is a small one over here. In Singapore, there are a few more, like Beng Quang, but a big cap company will be Modec. You would see over here that everybody is seeing a turnaround in tide and making record profits. But for these sectors, do note again, they are not the buy and hold kind. Peter Lynch has this classification. They belong to this sector, which is cyclicals. Feast and famine. When oil goes up, a lot of orders. When oil price crash, no orders and loss making. So investing or trading into these companies require you to understand the cycle and exit hopefully at the right time. At this market cycle, I think it's still pretty early. There is no sign of speculation, and that oil could jolly well trend upwards towards $100. Using again a long-term consolidated table of net income, we can see that Dyna-Mac was loss-making when oil crashed, but subsequently when oil started to recover, first step at $40, that was when it started to reverse and turn profitable back in first quarter 2021. As you can see boxed up in yellow, the net income started to grow, and right now it's at 10 times that of 2021 already. I'm quite used to trading small cap stocks in Singapore. That's why on the speculative rating, I think this is a 5 out of 10. And as you can see, the timing can be wrong also. I started buying in April, then in the next few months it declined 15 to 20%. And when it shot up, I thought there was a breakout. I bought again. Then it trended downwards. Then it climbed upwards where I started to buy, and yes indeed it finally broke out and is now on a massive bull leg up. I've started to trim positions ready, and on hindsight maybe a bit too early. I will be keeping what I have remaining, and hopefully you'll give me a bagger. Coming to here, if you have questions, leave them in the comment sections, and as always, smash the subscribe button, stay tuned for more quality content, and I might be releasing a sequel to this that you might be interested in. So with that, let's move on to the third name for today, which is listed in Hong Kong. I mentioned that you're going to be familiar with it, and it's none other than Tencent. Why I didn't talk about Tencent in a full tutorial is because I think viewership demand is still quite small, sentiment is weak in China stocks in general, and I think it'd be wiser for me to postpone doing it until it's on a full bull leg. But if you've been following this channel, you do know that I've been keeping my China allocations through thick and thin, and this is a more speculative trade to add on to what I already have. So in terms of speculative rating, maybe slightly higher at 6 out of 10, mainly because Tencent is still not confirmed on the bull leg now, and yet I'm trying to trade up with it. When it shot up with growing profits in June, I actually waited for it to settle down before buying. Then when it seems like it's going to break out, I bought yet again. And then in July, when it really looked like it's going to break out, I bought yet again. Unfortunately, it has yet to work out, but these 3 positions are still very small. So I'm going to be pretty patient with it. Like what we saw in Dyna-Mac, sometimes it could take 3 months, 6 months, or even longer. That's regarding the momentum of Tencent stock. But in terms of value, I think Tencent definitely scores quite well, correct? It's so depressed already. In terms of quality, Tencent definitely scores. Tencent owns WeChat, which is the king in China's social networking. Tencent also owns major games in China and internationally such as PUBG. All in all, the bottom blue bar, as you can see over here, value-added services comprise of social network, which is WeChat, international and domestic games. This is the key sector and is growing, correct? As what I've drawn in green. The good part to know about Tencent is that all segments are growing pretty well. And with such growth, measured against Tencent's current price-earnings ratio of 25 times, the reason again of why it's so cheap is because there's still a lot of negative sentiment on China stocks that as an investor you gotta get to terms with. So again, it's a small position that I have. I'm not too concerned if it trends downwards. But if prices starts to break up above $400, I might actually be accumulating more. Let me know if you agree with either this idea, Palantir or Dyna-Mac. And as always, if you're keen on Tencent, I've actually this previous video covering not just Tencent, but 2 other Chinese stocks that have shown growth. If you're curious about it, follow through and I'll see you there. Take care as always, goodbye.